$250 billion for xAI. I actually choked on my matcha.
$250 billion. It single-handedly dragged Q1 volume to 1.3 trillion.
Sullivan and Cromwell just build enough to buy a small country.
Oh, please. The data shows a totally K-shaped market. If you aren't Elon, those valuation gaps are brutal.
Speaking of brutal, wait until we unpack the Paramount and Warner Brothers boardroom drama.
Right after we figure out how SpaceX is actually paying for this. The rundown.
I just want to know who gets the bigger corner office on the lot when Paramount actually swallows Warner Brothers.
You're entirely too obsessed with the Hollywood real estate. Look at the balance sheets. They're mashing two massive mountains of debt together and hoping it looks like a media empire.
It's a survival play, Maya. You either consolidate or you get picked off. The whispers are getting louder every week. Private equity is just circling these vulnerable public companies, waiting for them to trip.
Sure, but it perfectly illustrates this K-shaped recovery the analysts keep talking about. You've got well-capitalized buyers executing these massive megadeals, while the smaller players are totally stuck in valuation purgatory. Paramount is just trying to force its way to the top arm of the K.
Speaking of forcing your way to the top, Unilever and McCormick, $44.8 billion.
I genuinely laughed when I read the release. They're combining Hellmann's Mayo and Old Bay. It's a literal sandwich merger.
Don't disrespect the spice rack. I think it's a brilliant defensive move. Food inflation is finally stabilizing, so you buy the ultimate pricing power. McCormick gives them absolute shelf dominance.
I completely disagree. Unilever is just buying revenue growth because their internal food innovation has completely stalled out. I guarantee when we get the full filings, half of that $44 billion is just going to be goodwill.
You always hate the consumer staples deals.
I just hate paying a massive premium for garlic powder.
Fair enough. Let's pivot to tech infrastructure. Intel is buying back a 49% stake in its Ireland Fab joint venture for $14.2 billion.
See, this is what actually fascinates me. The whole AI boom is a double-edged sword. It's driving these massive infrastructure needs, but it causes total strategic whiplash. Intel spun that out to raise cash, and now they're buying it back. Make up your mind.
I think they just realized they need total control over capacity, and they aren't the only ones moving hard assets. Anton Infrastructure just bought Sapphire Gas from Apollo. Energy and chips, Maya. Cross-border activity is just ignoring the geopolitical noise entirely.
It really is. Up 47% year over year, $454.7 billion.
Which perfectly tees up the big number. Global M&A deal volume just hit a record $1.3 trillion for the first quarter.
A record heavily padded by a certain rocket company buying a certain AI company.
Exactly, $250 billion. Elon moving money from his left pocket to his right pocket, and Sullivan and Cromwell taking the absolute top spot on the advisory league tables.
We need to pull up the financing details on that one, because valuing xAI at $250 billion requires some serious corporate gymnastics. The big one.
$250 billion. I just need to say the number out loud to make sure I am not hallucinating.
You aren't hallucinating, but the valuation committee might be. SpaceX buying xAI for $250 billion is the definition of a related party transaction on steroids. It is literally Elon buying from Elon.
Okay, yes, the governance looks completely wild from the outside. I will give you that. But look at the industrial logic. It is a massive infrastructure play. xAI needs infinite compute and power. SpaceX has Starlink. They are building off-grid energy systems. They own the orbital real estate. It's vertical integration at a planetary scale.
I'm not buying the synergy narrative, Nate. You don't spend $250 billion just to share some solar panels and satellite uplinks in Texas.
Oh, come on. It is way more than solar panels, and you know it.
Look at the actual mechanics here. How is SpaceX funding this? Both companies are private. Are they just swapping paper? I'm counting the minutes until the SEC filings drop tomorrow so we can see the actual financing structure. Because right now, this feels like an artificial markup just to justify raising another massive round of capital.
Spoken like a true former journalist, skepticism first, but you can't deny what this did to the quarter. This mega deal single-handedly pushed Q1 global M&A volume to a record $1.3 trillion.
Which is a wildly misleading number. The market analysts are totally right about this K-shaped recovery. Yes, we hit 1.3 trillion, but if you strip out SpaceX and you strip out cross-border megadeals, which somehow surged 47% to over 450 billion, the middle market is basically dead.
Because buyers and sellers can't agree on a price.
Exactly. Smaller segments are completely paralyzed by valuation gaps. Industry experts are pointing out that this AI boom is a double-edged sword. It's driving these massive infrastructure acquisitions at the top, while simultaneously disrupting legacy software models and forcing brutal valuation resets everywhere else.
The big get bigger. It is the golden rule of a K-shaped market. And nobody got bigger this quarter than Sullivan and Cromwell.
Oh my God, the advisory rankings.
540 billion in announced deals for Q1. $500 billion of advisory credit for one firm. I guarantee you the partners at S and C are picking out new yachts right now. As an ex-banker, I'm actually tearing up a little bit. It's a beautiful thing to witness.
I'm sure they are deeply moved by your tears. But seriously, the concentration of fees at the top is staggering.
Well, they earned it on this one. Structuring a $250 billion deal between two companies with the exact same founder takes some incredibly creative lawyering.
Creative is one word for it. I prefer the word terrifying.
Speaking of terrifying boardroom dynamics, we need to talk about the other elephant in the room. Or should I say, the two elephants currently trying to merge in Hollywood.
You mean the Paramount and Warner Brothers tie-up?
Exactly. The gossip on this media blockbuster is getting loud, and I have some thoughts on who actually survives the executive bloodbath. Voices. So every single analyst note crossing my desk this morning is using the exact same phrase, K-shaped recovery. They are completely obsessed with it.
Let me guess. The big guys are doing $250 billion AI deals, and the middle market is still arguing over working capital peg adjustments.
Exactly. The valuation gap is massive. You have SpaceX dropping $250 billion for xAI and then a total desert for deals under $1 billion. Private equity is just sitting there drooling over these vulnerable mid-cap public companies, waiting to take them private at a discount.
See, I actually hate the K-shaped narrative. It ignores the actual data. Look at the cross-border numbers. Dealmakers are calling the environment highly resilient. We just saw a 47% surge year over year, 454.7 billion in cross-border volume alone. That is not a desert.
Maya, come on. Half of that volume is just a handful of mega deals. Unilever buying McCormick for $44.8 billion is doing a lot of heavy lifting for those stats.
Fair, but the AI analysts are making a much smarter point. They are calling this boom a double-edged sword. Yes, you have the massive infrastructure acquisitions, but legacy software valuations are getting absolutely crushed. They are being forced to reset.
Which is the banker's dream scenario. Disruption forces sales. It is why Sullivan and Cromwell just posted $500 billion in advisory work for Q1.
540 billion, to be exact. I checked the league tables.
Of course you did. But this valuation reset is exactly why Paramount trying to swallow Warner Bros. Is going to be such a bloodbath. The boardroom drama is already leaking.
And the regulatory scrutiny on that media tie-up is going to be brutal, which actually tees up perfectly what we are watching for tomorrow. Spill the tea. I refuse to believe this Paramount and Warner Bros. Thing is actually going to happen.
Oh, it's happening? The egos involved alone guarantee we get at least 6 months of phenomenal boardroom leaks.
But look at the balance sheets. You're just mashing two legacy media debt piles together and calling it a strategy.
That's exactly the strategy. It's this whole K-shaped recovery we're seeing. You bulk up to survive, or the private equity guys pick you apart?
Which PE firms? The sponsors are stuck arguing over valuation gaps on much smaller targets. They aren't swallowing Warner Brothers.
Not the whole thing. But you know the big funds are circling vulnerable public companies right now. Apollo just flipped Sapphire Gas Solutions to Anton. They have dry powder and a taste for distressed assets.
Wait, really? You think Apollo wants a failing streaming service?
I think Apollo wants cash flow, Maya.
I still say regulators block Paramount and Warner before the ink even dries. They aren't letting two major studios merge just because they're scared of Netflix.
I completely disagree. They can spin it as a survival merger. If they don't combine, they die.
Regulators don't care about your streaming losses, Nate. They care about market share.
Fair, but the bankers need the fees.
Speaking of fees, $44.8 billion for Unilever and McCormick. I just want to know who gets the corner office, the mayonnaise guy or the Old Bay guy.
My money's on Old Bay. That stuff is basically currency in Maryland.
Well, before we get lost in the condiment aisle, we need to talk about the actual market mover.
The $250 billion elephant in the room?
Exactly. We're waiting on the official SEC filings for SpaceX and xAI to drop tomorrow, and I have a feeling the financing details are going to be wild. Tomorrow's radar.
I am refreshing Edgar at 6 a.m. tomorrow. We need to see the actual financing structure for this $250 billion SpaceX and xAI tie-up.
You really think we get clean numbers? Half that filing will be redacted for Martian colonization protocols.
Oh, come on. Sullivan and Cromwell didn't rack up $540 billion in Q1 deal credit just to file a sloppy S4. They will show the math.
I seriously doubt it. But while you hunt for Elon's math, I am watching the antitrust desks. Tomorrow we start seeing the regulatory fallout for both Paramount Warner Bros. And Unilever McCormick.
Right, because nothing says dangerous monopoly like cornering the global market on mayonnaise and garlic powder.
Hey, food inflation is a massive political target. $44.8 billion of condiment consolidation is exactly what gets regulators out of bed.
Fair. Plus, we have private equity shops aggressively circling the bottom half of this K-shaped recovery. If your public valuation is down right now, lock your boardroom doors.
We will be tracking all those SEC filings, the take private gossip, and the antitrust drama as it hits the wire tomorrow.